introduction, yourself, your firm, Eric's not an investor, but he's adding to the conversation. By the way, in the app, you'll notice that Lee Rand of Mexico Ventures is supposed to be here. He's missing. He had an emergency come up, so unfortunately he couldn't join us, but he's here in spirit, so thank you, Lee, for being a supporter. But if you would start out, Edan, with just introducing yourself, your fund, how long you've been in the region, and then we'll take it from there.
Okay, so nice to meet you. My name is Edan. I'm the founder and the general manager of Disrupt, which is an early stage VC. We basically, well, it's a founders fund. All of the partners are former founders and with exits or successful companies. Myself, I founded and sold 4 companies before I was 28. And we invest in different regions from UK, US, Canada, Colombia, Peru, Mexico. And we are very active in different hubs in LatAm, especially in LatAm and US and Canada. And I think that's it.
Good morning, everybody. I'm Antonio Rayo. I'm the CEO of a company called Ideas, which we're basically a club of angels, if you want to categorize it somewhere. We've been investing very early stage in companies all over the world pretty much, but there's a big focus on trying to bridge Mexico with Silicon Valley because of my background. I worked at Apple back in the late 80s, early 90s. And ever since then, I've been trying to bridge Mexico, not with the US, but with Silicon Valley, because I felt that if you needed investment, there is no way we were going to get enough investment from the Mexican local VC community because they don't have the same resources as a big fund like Andreessen Horowitz or Sequoia. It turns out now that everybody's in Mexico. If I show you a slide that 2 years ago had like maybe 5 logos per country about all the VCs that are in the different Latin American countries. Today, you have everybody, all the usual suspects are investing in Mexico, and they're afraid of, and they're getting much more aggressive on the early stage. Before it was like a Series A and above, and now I've seen some funds going like pre-Series A and things like that. Let's see if Adan or Eric have the same perception. But we've been looking at it very closely. We now have a portfolio of 27 investments that we've done. A few in Seattle, in the Bay Area, one in Estonia, one in Australia, and the rest in Mexico. And looking forward to discussing why this is a very great opportunity and a very good formula, mixing the two.
Now I'm going to turn it over to Eric. Eric is not an investor. He's the CEO of Rever, and you'll get to hear from him in the session following this one, but Rever was the first company out of Mexico to receive an investment from Sequoia, and it's huge news for the region and really sets the tone, and Eric's just a fantastic founder, and I thought it would be important to share his perspectives too as a founder. What's the fundraising landscape like since the SoftBank fund was announced?
Yeah, so just to introduce myself, Eric Dunn, co-founder and CEO of Rever. And as Lynn is saying, I'm not an investor, but I'm an expert in trying to fundraise in Silicon Valley as a Mexican-based company. I've been doing it for the last almost 5 years, and I've seen how the environment has indeed changed in the last years. So happy to share my view.
Great.
Let me say something just real quick about so that everybody's on the same page. In Mexico, for the longest time, if you wanted to be an entrepreneur, it was really hard because you would come out of the university and either you go and work for a very large company because there was no entrepreneurship money out there. And either that or a family office will fund you. But family office is traditional, I'm not saying all of them, and I deal with a lot of them. They did an investment in a very different way. For example, I've seen family offices asking a founder for 51% of the company or things like that. So it's important to understand that because today, you have to have a very interesting healthy cap table. Otherwise, the VCs, when they come into your company, they won't invest because it doesn't have the right structure, and it's going to be very hard to clean. So just bear with us because for the longest time, I mean, I've been trying to convince the funds in the US to invest in Mexico since the year 2000, and they used to laugh at me back in the year 2000. Today, it has completely flipped 180 degrees, and now they're very, very aggressive, and everybody's coming here. And so I try to tell people that we might not like it, but the rules are like in Silicon Valley. So if they play American football, we have to play American football. You know, we like to play soccer in Mexico. The ball is on the ground, not on the air, and all these different things. But that's what that's what American football is, and so you have to be, what I always say, and they make laugh at me because I always say this is plain vanilla Silicon Valley. You know, how do you make it so that it's smooth transition? And what I think it was great from the investment from Sequoia with Rever, which I had never seen Sequoia invest so aggressively. In 2 weeks, he had the money. So what did you do for you to have the money in 2 weeks? Because it's weird even in the US.
Well, I could easily tell the short version of the story, which is, yeah, sure, I went out fundraising and after 2 weeks I had the term sheet. In reality, I was developing that relationship with Brian at Sequoia for more than 2 years, and sending him like updates of my progress and all the things that we were doing and so on. And then when I asked him for money, it was a little bit easier. Perhaps one piece of advice.
Tell them about the Zeta Ventures.
Oh yeah, but I just want to make one stop point here. Eric did a fantastic job of keeping investors up to date. I mean, some of the best presentation materials, just, you know, short, succinct, powerful updates. So for years and years, I mean, just take that as a lesson and chat with Eric afterwards, because, you know, really, for anyone that's ever going to fundraise, which we all are, I think, in this room.
So yeah, just to emphasize that, I mean, the way I saw it is, as a Mexican entrepreneur, or as an entrepreneur that is primarily has operations based in Mexico, you know, you have to prove even more things, especially back then where it was unproven that you could actually execute a global company based in Mexico. And for me, the way to prove that was to give constant updates, sometimes every month or every 2 months, every quarter, to the investors that I wanted to attract, so they could see, you know, how the point was moving and how we were forming that line, and sort of that we could deliver on the promise of what we're doing. Like whatever we promised to do, we would execute, and then they would see the progress. If you want to tell the story a little bit about how we fundraised, and actually even before how our specific fundraise was, is I first started trying to fundraise in the US in mid-2015 when I was cooking the idea of what is now Rever. And the initial conversation has changed a lot from, hey, I have a team based in Guadalajara, and at the very beginning it would be like, Guadalajara? And where is that? And then it would change to something like, why would you do that? And are you sure you want to outsource or offshore and so on? And I don't know, it was always kind of iffy, like, why, is there any talent down there? Is there any technology? And recently it's been shifting to like, that is very smart. We like capital efficient companies. We've heard now a lot about Guadalajara and Mexico in general. I think Guadalajara has just cranked up the PR machine for the last 5 years, positioning themselves. But Mexico in general has now put themselves on the radar of as a great alternative to develop a great global company, great talent. So now it's been shifting where it's like they're looking for that. Actually, everybody in the Bay Area is suffering the pain of recruiting and retaining talent and the cost of life. So even investors are looking for startups that are setting a foot elsewhere. They're not looking too far yet. They're looking into Utah, into Arizona, maybe Texas, and then they're actually surprised that it's Mexico, and whether it's Mexico City or Guadalajara, it's much better connected to Silicon Valley in terms of transport and going from one place to another than going to Austin, for instance. So anyway.
Yeah, and Eric and Tony are going to take a deeper dive on the whole subject of integrating between Silicon Valley and Mexico following this, but to kind of bring it back to the SoftBank, let's just yes or no, Adam, good or bad for the region, and a couple sentences on why.
No, really good. To understand the SoftBank Effect, I think that we need to look at it from a macro perspective. And just a few years ago, you had the total venture capital investment was around 100 billion, and now you have just one fund allocating 100 billion. But if you compare that to the total asset under management market, you have like Bridgewater, which had 300 billion, and you have BlackRock managing trillions. And for example, I think 30% of some markets, like I was hearing yesterday, like NASDAQ, are VC-backed companies. I think even just Sequoia-backed companies. So that is like a response, a reaction. I know that now that the main topic is about the bad investments like WeWork and Uber, but they also have really good things like ARM and other companies. And I think this is just an adjustment, a reaction to a need in the market, because they are focusing globally. And for a lot of years, all the money was located in Silicon Valley. And this is a way to have a better deployment, a global deployment of the capital. So I think, and we see that with this $5 billion fund focused on Mexico, well, focusing in Latin America. And so I think it's a normal adjustment of the capitals, that there are founders everywhere and globally creating global companies, like in Mexico, Latin America, Asia, a lot of markets. And this is a normal, a logical step to provide that deployment.
I think that the SoftBank thing, when you're a big guy like them, they talk about billions always. They don't talk about a small investment like $1 million here or $1 million there. That might sound arrogant, but that's the truth. So when they do adjustments like what they just did with Uber and $1.8 billion adjustment, we might think like, oh, this is crazy, but that's the level of scale that they're up to these days. So for them to move the needle, that's the amount of money that they need to be talking about. But I think that in general, in Mexico and Latin America, there's a huge opportunity, and now people have realized that they don't have to go to the Bay Area to make it. Now they can stay here. We have many cases that I can give you reference later offline, we can talk about it, but for example, Roberto Bargagli, who's here, he had two guys that went to AWS, and worked really hard in Seattle for 2 or 3 years, and now they're back. Because the quality of life that they have, the Mexicans want their family, they want their uncles, their cousins, their grandpas, and whatever, and they want to be in this area where they eat the right food and whatever. So it's very important now that you don't have to be in the Bay Area to make it. Much less also that if I was a CEO of a startup in the Bay Area, my main concern would be losing my talent. There's poaching there, like it's crazy. I mean, my son is a computer scientist, he gets an offer every week, not a formal offer, but like, will you entertain talking to my boss about whatever? Once a week. And there's only, if you go to Palo Alto, how many hangout places are there? Like 2 or 3 bars maybe, top. And so that's where everybody hangs out. And then you start to get into each other. So I see Adan, and hi Adan, how are you? Next time I see him, I say, hey, I heard that you were very good in AI. Starting salary for an engineer in the Bay Area that well machine learning, $350,000. Starting salary. I remember when you came out of Harvard, $150,000 was a huge amount of money. So it's very hard to make ends meet in the Bay Area with $200,000 a year, by the way, for just a couple, not forget about kids and things like that. So I think that now people are realizing that it's a global play. Mexico is next to the US, it's the only Latin American market with 7,000 kilometers or whatever it is, 2,000 whatever kilometers of border with the US. But not only that, what I really, really, really like from Sequoia coming to Mexico and investing in Rever is that they validate that the engineers that Rever has, they are the same quality as the Indian and Chinese and whatever else guys I see in the Bay Area all the time. And it proved it. I mean, Zeta Ventures, which is an expert in AI, it's a company that the managing partner is the president of the Alumni Association of the MIT for AI only, and no, Mark. And he came and he brought an expert and they looked at it, because today in AI, it's very easy to pull up fastball, because you can download a very, very sophisticated neural network from TensorFlow or PyTorch or any of these different frameworks. And you can just edit 5 variables and then show me something and say, hey, look what I did. And if I saw it from scratch, this would have taken you 2 or 3 years to do, but they literally did it in a weekend. So now there's a lot of cheating going on, so you need these experts to tell you if this is good or bad. So I'm really, really proud that Zeta Ventures came to Mexico, validated his engineers, 28 of them, and said, hey, this is world class. There was not an issue. I mean, it was like world class,
Another thing that, in addition to the global scale, I heard Shu Nomura, who's one of the SoftBank fund managers for the Innovation Fund, speak, and he, which, by the way, SoftBank was invited to be here today, and they told me last night that they couldn't make it. He was explaining the perspective, the investment thesis is long-term, and he said, I don't mean long-term in terms of 10 to 20 years, we look at 300 years. And he said that is and I think it's probably a Japanese philosophy too, but when you're talking about Uber, and you say, is Uber overvalued right now? I mean, maybe on ride sharing as we know it today, but if you look at autonomous vehicles, if you look at even the mid-level flying vehicles, you look at delivery packages, you look at really replacing the whole transportation ecosystem, maybe that's not such a, a long shot as Adam was saying. I mean, some of these plays, they have the money to back a very, very long-term play, and their perspective is one of that reach. And this is talking about LatAm specifically. He said it's not a zero-sum game. If you are able to solve problems of financial inclusion, of mobility, of transportation, of education in the region, just imagine, how high up the region can grow. So that's a perspective to keep in touch with.
I think it's really, really important what you just said about solving problems. I think, for example, if you look at WeChat in China, if you see how many apps we need on the Occidental world to do what WeChat does, it's like 30 apps or something like that. And it's because the Chinese are solving very deep problems. They're going in very deep. They're not only copying Facebook, they're going like, I'm gonna be better at you at Facebook, and I think we can do the same in Mexico because, for example, the financial inclusion in the US, it's very easy to have, a credit card arrive in the mail for anywhere, you're pre-approved or whatever. In Mexico, that doesn't happen. We just invested in a company from Guadalajara that basically, with an algorithm, restructures your debt. This guy was very funny because he even went into debt on purpose, and then the bank would say, hey, to pay the minimum so that you don't get any interest is 10,000 pesos. So he would pay it. But then he realized that even at paying without paying the interest, he wouldn't pay enough to get out of the debt. So he's really solving a problem that in Mexico it's a $9 billion problem alone. So everybody, we're optimized here because we had very limited resources in the past. I think that we have a culture, and we use it in the right way. We have a culture where we're trying always to optimize everything, to make the rubber band longer and longer with very little resources. So I think that's one of the advantages that we can take because we have very creative engineers that don't need $10 million budgets per year just to do, something very basic in the cloud or something like that.
Let's switch to valuations. So, Adam, how do you feel this influx of funds affects potential valuations? Have you seen any change in that?
I think it needs to be according to the discipline of the founder. For example, talking about this long-term perspective of Vision Fund and also the global perspective, you have some logical investments like the Didi, Uber, with big companies, but you also have the OU investment with Agenda. And Agenda was a really small company. Actually, they pitched it to us from Medellin, and they were just looking for 600,000, and actually Vision Fund invested like 1.2. So they wanted to invest more money and to raise the valuation, but it was a lot of friction at that time, and the founder said that, you know what, this is the money I need. I can raise a little bit the valuation, but at the end of the day, founders need to understand that capital is like lending. They need to return that money. In lending, it's an interest rate, and then you have like the performance of the capital. So I think it goes directly to the discipline and the vision of the founder, also in the capital structure that they are creating. And of course, you're going to have a raising valuation. For example, right now, I just came from Ecuador, and everyone thinks that fintechs in Mexico are super expensive. But I think that depends of how efficient is with capital the founder and the capital structure of the company.
I think that, how would I phrase this? I think that, let me just go back like one step to SoftBank still. When Marcelo announced that they were going to do $5 billion in the region, it sounded like a lot, but maybe we're already late. We need to catch up. So I'm very glad that SoftBank is doing that and sending the signal. I think that we have to be careful with reading the other signals like Uber and WeWork. I mean, we all know the story about WeWork. This guy is a lowlife. I mean, how can he be buying his own buildings and renting himself? And I don't know how he managed to do all the scumbag things that he did. but that's one mistake, and there might be a few. If you look at a fund and how they invest, by X amount of years, maybe 20% of the company should be dead, or 50% of the companies should be dead by now because either they got acqui-hired or they got fused or whatever. So okay, out of the whole of SoftBank inventory, we have two very bad examples right now that are getting everybody very nervous. You have to be in them for the long run. And the problem in Mexico until now has been with the family offices is that they don't have the stomach for VC. They have the stomach for private equity. I mean, they do 10 projects, for example, real estate projects, and in some they're very, very successful, and in some they're not so successful, but at the end, out of 10 projects, the 10 projects were successful. Whereas in VC, out of 10 projects, maybe you get one. So you don't have the stomach, and you have to learn from those, and if they have to go under, they have to go under, and that's okay, it's nothing wrong.
But the rate of return on that one,
Of course.
yeah. I mean, important to say that.
No, but not everybody has the stomach, you know, and it's a stomach issue, because if you're like killing yourself because one of the companies went under, then you shouldn't be on this space.
Well, I think that's a really important. God, I wish we would have. Maybe we can talk about that later. But it's just the whole perspective of what makes a successful angel investor. Maybe we can touch on that in the afternoon panel today. But you and I talk about this all the time, so I know we're on the same page. But what about the entry of so many new investors into the region? Is that good or bad? Do they know the companies? Do they know where to go? Does that compete for deals with those who've been in the ecosystem for a while? And I'm not talking about Andreessen. I'm not talking necessarily about Andreessen and Sequoia, who I think are and Excel, who are fantastic entry into the region. But I don't know about you. I get calls all the time about, I want to pick your brain, or emails. I'm looking at investing in Mexico now. Where do I start? And so, what do you think about that?
I think the deal flow has gotten steadily very healthy lately, but in the early days it was hard. I wouldn't share with anybody what I was working on, because they might screw up the deal. Because they might say, "Oh, Tony's giving you this, I'll give you this," or it was like a competition, which shouldn't be. We should have been all working like, how do we do this together? How do we make this happen? Tell me how to yes, not to no. But lately now, I think that people have gotten more experience and everything. And in the U.S., it's incredible when you go to, in Sand Hill Road. These guys are sharing all the information. All the funds are sharing between them. What deals are going? What are they interested in and what not? We haven't gotten there yet, but I hope that eventually we'll start to trust each other a lot more on the local side, because we just need to make these investments happen and make the companies successful.
Eric?
So, if I'm add to it, I'm as an entrepreneur, I think all of this is fantastic, right? Increasing valuations and everything. But I think that the SoftBank effect, just as from the entrepreneur perspective, I think there's two parts to it. It's not only an effect or an event that is causing an effect of everybody jumping in. It's actually in itself the result of a lot of things happening before, right? Of Mexico being much more in the map and everything. I get the perspective that all of the investors are human, and also the Bay Area and Silicon Valley investors are also very human. And what that means is that they're seeking for validation from other investors before they decide to jump in as well. Mm-hmm. I don't want to say anything more than that, but yeah, they're like sheep, and I said it. And I'm glad that the SoftBank signal is sending that as a validation to many Bay Area investors who were probably waiting for that sort of signal to jump in. So that's a good thing. And also for Mexican investors, I think it's a great signal saying like, hey, there's people from outside of Mexico or outside of LatAm that trust more in